Hi. One of the most common mistakes I see traders make is overloaded charts. They add dozens of indicators here, add some more windows with accelerators at the bottom, add Fibonacci grids, and in the end, behind all these indicators, they don't see the most important thing. They don't see the chart. This is the kind of clean chart that actually gives you a lot of information about the market and what's going on right now between sellers and buyers. Moreover, sometimes the complexity of a trading strategy is the trader's own enemy. And even the simplest strategies often give results much better than complex, tricked-out trading systems or some fancy new indicators from TradingView. I'm talking about the usual moving average system, which actually, if you master it well, will give you good results. So I'll talk briefly about what exactly I mean by a moving average system. This is a common trading strategy that is based on the crossover of two moving averages with different periods. In this case, we set two moving averages on the chart, one with a period of 20 and orientation, sliding on the closing of the candle, and the moving average itself should be simple. Choose so that they are different colors. Let's choose one in red color, put it on the chart, and set the second one with a period of 50. And the second one is exactly the same simple moving average. Just let it be blue. So this is the simplest and most trivial strategy that many people learned at the very beginning of their technical analysis education. And it is explained literally like this. We have two moving averages, one slow moving average with a period of 50. It shows the average of 50 candles, and there's a fast moving average with a period of 20. It shows the average of 20 candles. And the mutual crossover between these slides indicate to us a change in local trends, fast trends versus long-term trends. So the strategy tells us that if the fast moving average crosses the slow moving average from the bottom to the top, it is a signal for an uptrade. And as you can see, it would work well here. The opposite situation, when the fast moving average, in our case red, crosses the slow moving average blue. This is a signal for a trade down. A very simple strategy, but even in this stretch, we can see that it has worked very well at least twice. Yes, like any torrent strategy, it will give bad results in flat markets. Like here, for example, we had at least one wrong signal. But today, in this video, I don't just want to tell you about the usual crosshair strategy, but to give you some tips on how even such a simple strategy can be improved and turned into a really good working tool for making medium-term trades. So the first thing we will do to improve this strategy is to add a parabolic indicator to the chart. So as you can see, the parabolic indicator is also a trend indicator. Let me briefly explain about how it works. When we have dots under the chart, it gives us a signal to trade up. And when the chart crosses this parabolic line, the dots change their location. And when we have dots above the chart, that's a signal for a down trade. And as you can see, the parabolic changes its up and down signals much more frequently. And it helps us to study both the long-term trend on one chart at the same time, on the example of moving averages crossing, and the short-term trend on the example of a parabolic. Basically, the strategy sounds like we first look at the crossover between the major moving averages. When we have a red moving fast, cross the blue, moving fast from top to bottom. That means we have a long-term trend down, which means we further switch to a parabolic and use only down signals on the parabolic. For example, we have an upward signal here, we miss it because it is against the main trend. Here we look at the down signal, use it, make a nice profit. Here we have an upward signal coming up next. But as you can see, it was unsuccessful because the chart went into a short-term flat. Next, we wait for the short moving average to confirm the downtrend to us again. Again, it crosses the blue, slow moving average from top to bottom. And now we are also looking for signals from the parabolic to trade down. This up signal we skip because it is against the general trend. This is the down signal we use. We skip this short up signal as well. It would be unsuccessful, but we use this down signal and get a good profit. This way we can study trends on the chart in several scales at once, both large and short at the same time. And it will simultaneously improve the efficiency of the usual strategy with moving averages crossover and the efficiency of the usual use of the parabolic, because the parabolic itself gives a lot of signals, and of course, some of them are unsuccessful. And so we can use only those parabolic trades that we are more likely to profit from. And one more important point, this strategy allows us to avoid flatness, because as you can see, here both moving average and parabolic give variable signals at the same time, and we do not have a clear direction of the chart. At times like this, it's best not to trade. Any trending strategy will perform poorly. But that's not all. Let me now show you how you can still improve this strategy. To do this, we can go to a higher time frame and mark key support and resistance levels with lines of a different color. Here we have a level that acted as resistance before, and here it acted as support. Let's label them in orange. And here we have a level which acted as a local resistance for a long time. You see, the chart has often bounced in the opposite direction from it in the past. Also, here we can mark local support and resistance. The intermediate level that used to act as support is now acting as resistance. All we need to do is to mark only the most important levels, only the most important price points, from which there have been bounces in the past. And then we move on to our working time frame. And these are the key lines we will use to look for moments where a bounce is more likely to occur. This means that when we will be, for example, in this situation, we follow our strategy. We see that the red moving average has crossed the blue moving average from top to bottom. So we're looking for trades down. We skip this up signal, we use this down parabolic signal, which you can see how long-term and beautiful it is. This is where we would enter the trade down, and this is where we would lock in the profit. Why this particular moment? Because the chart has approached the support level, and we can take profit, because we expect a rebound from the key support level in the future. Also, the parabolic tells us that the chart direction has changed to a medium-term trend, and here we can lock in a profit on this big trade. So those are the three elements that are all basic, all very simple. The moving average strategy is very simple. It is one of the first strategies that traders basically learn. Parabolic is a very simple and visual indicator that doesn't even require separate training. Just put it on a chart, you immediately visually understand how it works. And support and resistance levels basically give us a guide to where the charts can turn. And we can use resistance support levels, firstly, not to trade against them, and secondly, to look for moments when it is better for us to fix the profit on the trade. These are such simple elements without loaded charts, all very clear and all visual. You can use in your trading and get a good profit from it.